Begin the money show finally, and with back-to-back hikes by the Reserve Bank of India, EMIs for home loan borrowers has also gone up. And if a new home loan borrower's income has not gone up significantly in the last year, their maximum EMI affordability will not increase due to interest rate hikes. A much lower home loan amount will require the same EMI for the same tenure loan. So, is it the time to dream for a small dream house? Let's get this question answered by Pankaj Kapoor, founder MD Liases Foras, and Hemant AR AVP Communications bankbazaar.com. Hi, good evening, and thank you so much for holding up today. Pankaj, my first question to you is, what exactly is happening? Are people buying more homes in the affordable category? What's the price ticket are we talking about? Are people dreaming small for their dream house?
I think it's contrarian. Post-pandemic, we have seen that the people aspiration for bigger houses has increased. So we have seen the tendencies like, the new projects which is being launched where 1 BHK, 2 BHK sizes have been slightly increased than what it used to be. And my own sense is that I think we have already touched the threshold, the minimum threshold in most of the cities. Like if you see in Mumbai, my 1 BHK at the carpet area is of around 400 square feet. If you go to Bangalore and some other North Indian cities where the 1 BHK sizes could be slightly bigger in the range of 450 to 500 square feet. 2 BHKs also, if you see that they are in the size range of around 600 in Mumbai or 550 to around 700 in most of the cities, and North India and the Bangalore sides, they are slightly bigger. But and that's basically because the local demands are for the bigger sizes of apartments. So my own sense is that the sizes of apartment actually pre-pandemic had really squeezed quite a lot, and that is where the demand really got impacted. During the pandemic, people realized that they need bigger houses, and the new launches came up with the bigger size of the apartment. However, we need to see that the coming supply, the new launches post 2023, how it is going to be tending, because the EMI has increased close to 15%. The cost of the houses, because of the increase in the prices in the recent times, has also increased close to 12 to 13% across most of the city. So the cumulative increase in the cost of owning the houses by virtue of increasing the EMI and the increase in the cost is close to 28 to 30%. And despite increase of the 10% in the income in the last 1 year, we still see that the affordability has really shrunk close to 15%. So my own sense is the impact will be felt, but I do not see there's too much of a scope for reducing the sizes beyond this point. Maybe builder may look at moderating the cost in the hands of the consumer by providing certain incentives and benefits and absorbing the increased cost of the EMI to themselves. I think that is what is the way forward looks like.
Hemant, what I want to understand from you is that we are actually seeing the highest rate hike, at least in the last 4.5 years. It is going to hit differently to the existing EMI payers, and it's going to hit differently for people who would want to take a home loan now. What is the difference between the two? And someone who wants to opt for a new home loan will definitely not get a loan of a higher amount. How?
Good evening, Kavita. Good evening, Pankaj. So I want to tell you something very interesting that's going on, and it will be probably a little bit of a contrarian view to whatever people are saying right now about rising interest rates. And the interesting thing is that obviously, yes, home loan interests are going up, rates are going up, they're back at pre-pandemic levels. But the interesting thing which is happening right now is that home loan interest rate spreads are at a 3-year low. Let me repeat that. Despite rising interest rates, home loan interest rate spreads are actually at the lowest they have been in the last 3 years. And this is very interesting. And the key takeaway from this is that if you're paying a very high spread over the repo rate, refinance right away. And if you are a new, you're looking to be a homeowner now, you're looking to buy a first property. If you borrow now, you would lock into a very low spread right now, and that would be your spread for the rest of your loan. And once interest rates start to fall, once the repo rate starts to fall, your 20-year loan might be paid off in, let's say, 15 years at no extra effort. I want to take a minute to firstly explain what a spread is. So your loan interest rate has basically two components. One is the benchmark rate and the other is the spread. So the preferred benchmark today is the repo rate, and the repo rate is 6.5 today. And the spread is what you pay over and above the benchmark. So let's say the repo is 6.5 today and your spread is 2.5. The rate is the sum of both numbers, that is 9%. So at Bank Bazaar, we've been tracking what is happening with these rates over the last 3 years. In March 2020, the spreads were in the region of 3.5 percentage points over the repo rate. By last year, it had come down to 2.4. That was the lowest spread in the market. And today, you would be surprised to know the lowest spread in the market today is 1.95. There are several lenders who are lending at 8.45, 8.5. Those are obviously holiday. They are year-end special offers, and they might expire at the end of March. But the fact is, these spreads are at the lowest they have been for a very long time, and that is, yes, there is a crisis going on with inflation. It is difficult for people to borrow the way they want to buy the kind of houses, the sizes that they desire. But if you lock into these spreads, your spread is fixed for the rest of your loan. And that is your opportunity. You can borrow at a slightly higher rate now, but the rates will fall at some point in time, and that is your opportunity.
Hemant, are you trying to tell me that it is really not going to impact your loan amount and the EMI also that you might have to pay because of the lower
So,
spreads?
yes, so it will have an impact in terms of what you need to pay today. What I'm trying to say is it could get easier later on. Yes, you're right that to buy the same house, you might have to borrow a little more. You have to pay a slightly higher rate now, and that might impact, your readiness, your ability to buy a certain house today. But if you are able to do that, if you are able to buy what you need to buy, it will get easier for you as time goes by. And at some point, it could be in a few quarters from now, the RBI will start to cut the repo rate again. And at that point, your loan tenure will start to drop, because whatever changes happen to the repo rate, they'll get immediately passed on to you in the same quarter. And that is the opportunity. That's what I'm trying to say.
Pankaj, now given this scenario in mind, I want to understand from you the pockets where the demand you see is slightly up as compared to maybe urban areas, or there has been a demand shift in certain pockets. If you could just identify, and even the kind of sizes which builders are also offering. Is there any kind of a data which you can share with us where builders are seeing a huge demand in small size houses, or maybe tier 2 towns where people have really moved considering the pandemic impact and the work from home culture? Is it still sustaining? Has there been a shift on these lines?
What we are seeing, especially in the area of 1 and 2 BHKs, if you look at this is like a first time home buyers demand, and then 3, 4 BHKs are generally upgradation projects. So in that, the reduction possibilities are much lower. But when you look at 1 BHK and 2 BHKs apartments, in the last 1 year, ever since the property prices or interest rate started going up, we have seen very marginal. I'm seeing that overall decline in the sizes at average at top 6 cities in India is less than 3%. So that's what I see, that the threshold is the lowest. But when you see the demand side, we are seeing that it has affected the affordable and the lower segments of the people. Mid and upper segment are the demand is strong and it is moving and showing a growth. But the priority sector, which is less than 30 lakhs apartment cost, and then the affordable segment, which is less than 50 lakhs, we have seen there has been a bit of a decline, and largely because these are the people who are highly impacted by any increase in the cost, and they are the fence sitters. And apart from that, the Mumbai metropolitan region has been the highest grosser in terms of the sales. And despite increase in the property prices as well as the interest costs, it has been staying strong. Bangalore has been doing good. Hyderabad has been doing good. Some of these micro market has been doing good. Ahmedabad has been doing good. But Delhi NCR, because of the past issues of many projects which are still stalled and all those things, we have started seeing the prices increasing in those market because we have a limited supply which are marketable. The new launches are still much lower than most of the other cities. So NCR, we are not seeing much of the recovery to be able to reach to its old time. So when the market size used to be as big as Mumbai market, but look at Hyderabad, Ahmedabad, Calcutta, Mumbai, Pune, the market are very productive and they are selling. Mid and luxury, ultra luxury segments are showing good demand.
Okay.
Affordable and priority sector have seen a dip.
All right, last question to you, and then we will wind up the discussion. Hemant, obviously it's very important for you to figure out how you will pay your EMI. Repayment strategy really needs to be very solid at this particular time. You need to figure out the kind of arrangement you have, the kind of corpus you have already made to buy a house, but then what all goes into planning the repayment strategy at this particular point?
So we know that most people don't tend to hold on to their home loans for the whole tenure. So let's say somebody takes a 20-year loan, they'll pay it off in 8-10 years, and that is consistent. That tends to happen a lot. What we are saying is that if you don't have any kind of financial stress or any urgency to get out of debt, take your time to pay off your loan. So the advice that we always put out is if you take a 20-year loan and if you prepay 5% of your loan balance once a year, your loan gets paid off in 12 years. And there are many ways to get around this prepayment problem that we have going on right now. We are saying prepay because interest rates are very high, ridiculously high right now. Some tenors, people who have borrowed in the last year at 6.5, they would have seen their 20-year loans go up to 50, 55 years without the EMI hike. Voluntary EMI hike is a very powerful tool in managing the stress that is being currently caused. So if you can increase your EMI by 10%, that would have a really powerful impact in shortening your tenors. And lastly, remember that these tenors, when the interest rates go up, they'll balloon out of control. But you have to remember your intended time frame for paying off that loan. So let's say you intend to take a 20-year loan and pay it off in 10 years. Ensure that you're paying at least 10% of your loan balance every year. So in 10 years, your whole loan gets paid off.
Right.
And that is how you remain on track, and you don't allow your inflation and rising interest rate to stress you out.
All right, so that's the entire plan right from the time you want to buy your house or repay the home loan that you have on you right now. Thank you so much, Pankaj and Hemant, being on the show and helping our viewers with that. On that note, we'll take a quick break, and post that, let's talk about crypto scams with Ritesh Bhatia.